Hello and welcome in. Let me just check on my settings here. All right, so tonight we are going to be talking about retirement funds. My retirement fund that I made drastic improvement to, ditching a target date fund that I was invested into, high yield saving strategies, my exact millionaire plan, and I have to share the good, the bad, and the ugly, some wins and lessons that I've learned along the way. So, we're going to be taking a look at my Webull account on some of those things that I want to share. So, we're going to get started by talking about my retirement account. And KG highlighted what I have built and turned around a particular position in FXAIX that I've made drastic improvement to, and I'm going to show you where I started and how I was able to get that situation turned around. So we're going to start with that. So my retirement account is right now, this particular account, I have different ones from different jobs. I've been laid off a few times over the years, but this was from my very first job. And right now it's at about $162,000. Guys, just can somebody leave me a response in the chat just to make sure that I am streaming? You're able to see me, hear me, everything is going good. But uh, Thank you. Thank you, Amanda, for just giving me a comment so I could know everything was okay out there. All right, so let's get into this. Now, my retirement account, I made some big moves with it. I had about $120,000, and when I ended that job, my money was sitting at empowerment, and I went on to another job for years, and I just left it sitting at empowerment. I was in a target dated funds, and I'm going to quickly just at a glance for like a quick report card kind of a view of the fund that I was in. This is it on Morningstar, and you will see, let's see. You see up here, there's a 2-star rating. Lisa will no longer be in any 2-star rated investments. As soon as we click over to FXAIX, we see that this is a 5-star investment. So let's talk a little bit about this fund that I was into. So it is an empowerment 2040. It's called the MXBDX. It is a target date fund. I don't know if any of you guys out there have this at your job. If you're currently invested into it, I want to hopefully, if anyone is in a fund that needs to be evaluated and put into something more aggressive, more in line with your needs. I hope that what I'm going to share during this portion of the live can help you to get on track, because this is why I'm doing this. So I'm here to share my journey, but not just the things that I'm doing right. I'm definitely sharing the things that I've had to make improvements to, that I've done, the mistakes that I made in the past also. So hopefully someone out there doesn't have to make those same mistakes. So this fund right here, the one that I ditched, this is it. And I had to move it because in looking at it, we have an expense ratio of 0.90%. So that's nearly 1%. I am a woman of a certain age, but not at an age that I needed to be this conservative with my investment choice and be so drastically beaten down with these fees that are going to be eating away at my returns. And so we take a look down here at what is in the holdings of this fund. And the first thing is the Empowerment S&P 500, which is what I wind up shifting to, is an S&P 500 fund over at Fidelity. But already we see that this one has an expense ratio of nearly 1%. There's no reason for me for this type of exposure to be losing that amount to fees on a constant basis. Next up in this fund, it's an international index. Third portion down, as far as the weight of the portfolio, it's a large cap value. these all and fifth down is also a large cap growth. These sound like things that should be good choices over the last few years of, uh, we know how the economy was the stock market was thriving off of those large cap companies, but I was not. This fund was not a good fit. We're gonna take a look over here. I'm gonna show you the performance as compared to, um, the fund that I shift over to, whether it's a VOO or FXAIX, an S&P 500 fund that is more in line with giving you the performance of the stock market over the last couple of years. So, over the last 5 years, the fund that I was in is up 7.17%, while FXAIX over the last 5 years is up 94.80%. So, me sitting in this fund was a huge mistake. That is what I'm trying to share. So, I had to get that moved. The normal yearly rate of return of the S&P 500 uh, is about 10%. But we know, I think everyone here that is very interested in this and following the stock market the way that we are, you know that we had 2 years back to back with over a 20% rate of return. So let's go on to talk. Let me go ahead and show you now where I'm at with this fund. Yeah, this is the stage. So all right. So we are here. So currently, since moving this fund over to FXAIX, which is the Fidelity 500 Index Fund, I've grown it by 30% currently. I'm up $36,000. And I have 400 and, no, not 400, 742 shares. And okay, so as I was mentioning, so with the S&P 500, whether it's VOO, FXAIX, we see that in 2024 and 2023, we had about, let's say, 24% rate of return, while the fund that I was in was at 10, 15%. Across the board, you see that it's just not performing in the way that me just being directly invested into the S&P. Now, I do still have some investments, some of my retirement investments in target dated funds over at Fidelity, but I'm okay. I'm in tune with the performance and the fees, and it definitely is not this one that I was in. It's no comparison because I know what my standard is. I know where my bar is. I know what I expect out of my investments. And so let's see what's my next slide here. All right. So also with this, I get a quarterly with my investment into FXAX, I get a quarterly dividend payment. So, um, with these type of funds, it's not it's a like usually a 1%, less than 2%, let's say, dividend payment on a quarterly basis, but I'm fine with that, and it's also something that is helping this fund to grow. Now, in here, I also have, let me pull this down for a second. So in this fund, now that I'm in a different place, that I've become more hands-on and more comfortable with investing, because there was a time when I first started investing outside of my 401k, let me say that, because that's all I was doing for a very long time, that I thought to myself, like, I'll handle the buying some Apple stock and some NVDA or something on a smaller scale. I can do that, but I wasn't at that time ready and confident. I am now that I didn't think that I would handle the six-figure accounts. I wouldn't, hopefully on the way, which I am going to share my millionaire plan, I didn't think that I would ever be hands-on managing those size accounts, my retirement accounts, because I thought that people at the brokerage companies could do it better. And being in these type of funds was the easy way to go about it. But it's not about easy. It's about being in tune with your age, being in tune with your expectations for your portfolio. And mine have drastically changed, especially being a part of this community and having my eyes open to the potential of building wealth. And of course, in my adult life, being laid off multiple times and not wanting to be as free as possible from corporate America and make sure that my investments are growing. All these things together has led to, a shift in the way that I've been going about investing and making sure that my portfolios, all of my money in general, because we're going to talk about savings also, is growing at the best possible rate. So now, also in the same portfolio where I have that 700 plus shares of FXAIX, I've also started to incorporate some individual stocks, and I'm going to show you what those are, and they are TSM and NVDA. So I had some cash there. Like I said, I'm in a much more comfortable place with choosing individual stocks, knowing that I'm a responsible person that's going to keep up with what's going on with these companies. So this was kind of my first time investing into individual companies like this in a retirement account. This is in my IRA over at Fidelity. So right now I have 15 shares of both of these, and I'm willing to hold on to these for the long term because I wanted to have some more exposure to AI, the semiconductor area. If I do have a chance, I don't know if I will again because I didn't get in on any AMD to add to this portfolio also. But this is what I've decided to add here as additional exposure. So guys, I am going to drop the my StreamYard link after I get a little bit through my topic. So if anyone does want to come up and talk to me on panel, you can do that. And if you're not already, please subscribe to my YouTube channel. So let me see. And I think I'm going to incorporate, as you can see, much smaller positions into individual stocks because just like Keenan shows us with his structure, I want stability. I want just those steady dividends. I want a bulk of this account to be in something that I know is going to recover, is going to have that slow, steady growth over time. So I know that these companies can be volatile when things happen, just like with Tesla and different things that I have smaller allocations to in my portfolios, especially in my daughter's portfolios. I want to be conservative at times, but have a good balance in order to achieve the growth that I'm aiming for. So let me know in the chat, are you guys invested into any target dated funds? Have you ever experienced really digging into your accounts and finding that you had to make a move like I did because of a very high expense ratio, because of the performance, just all of the elements? And when it comes to retirement, that's usually for most people, I would say, the biggest account that you start to build up. So um, that's where I I just somewhere I don't want any mistakes to be made. So I want to see people, if you get off on the right foot and make sure that you are on track with it and is growing from the start. If not, be evaluating it and make changes in order to make sure that when the time comes, I don't want you to look back 30 years, 20, 10 years later and say, I could have made so much more if I was invested into something different. So make sure that you are being mindful of this. Now, that is what I wanted to share on that retirement account that I got turned around. And now let's move on to my Millionaire plan. So I literally have this picture screenshot saved in the favorites of my phone. And this dates back to September of 2022. and this is a little bit of a bigger view of it. So this was me just going into the investment calculator and putting in some numbers. We were using a very low rate of return of 7% in this example, but starting out with what I had towards retirement on this particular date, I put in $198,000, and we figured out that 19 years of me investing $615 monthly would get me past that $1 million mark. Now, a couple years later, my retirement accounts are my investment accounts, let me say, whether it's retirement or early retirement, my investment accounts as a whole are now up to $381,000. So I'm not at millionaire status yet unless I have to include the properties in there in order to get over that hump. But for now, thinking about investments, I can continue to go into this investment calculator and use this as a way to gauge where I'm at and make those goals for myself, set figure out how much I'm going to need to stay consistent with when it comes to my investing in order to achieve those goals. And this is just something that I wanted to do. I know not everyone has a goal of having $1 million investment portfolio, but whatever it is, I want you to know that you can take the time, put these numbers into the investment calculator for yourself, and use that for goal setting. Connect with your brokerage company. I know I use Fidelity, whichever you use. With Fidelity, when it comes to my retirement accounts, just like I was showing you at a glance with the Morningstar ratings, my retirement accounts also give me that type of little rating system to say, after I've given them lots of information on what I expect to need in retirement versus what I'm on track to, with my investment accounts, it shows me that based on what I'm investing, how much of a percentage I will have towards it, and it gives you a ranking. So these are things for you to look out for when it comes to your planning for retirement. And with that, you have to have a plan. You have to even if it's a rough estimate, put something down. Know, am I going to have my house paid off? Um, if you are going to tap into any pensions, Social Security, all these different things. We're not sure, especially at certain ages. Some of us are very far from tapping into Social Security, so we don't know how much it will be when our time comes around. But all of these different elements and how much you will need. I definitely don't want people to be out here strictly 100% dependent on Social Security to take care of themselves in the future, because from what I've seen and in my personal experience, it's not going to be enough. So this is a look at my exact way of how I came up with my millionaire plan. And if anyone wants, we can pull up the investment calculator and put in some numbers. But for now, I'm going to keep going with my topic. And let me pull this down for a second. And now, I shared a bit of this in one of my videos that I made as we were kicking off the challenge. I shared my positions in my Webull account, which is this is my, taxable accounts, early retirement accounts, that I was sharing all of my Mag 7 investments and where I was at with building up those certain positions, as well as my VTI and VOO, my foundational investments that I have over there. So let's see. Oh, I got a little out of order, but I'm going to stay talking about that because I went over to it. Let's see. Okay. So, all right. So here's a look at some of my positions when it comes to, like I said, those individual stocks and ETFs. I've had some easy positions, and I think anyone who's told me, like, I'm invested into Apple, NVDA, Amazon, even if they're are 100% invested or heavily invested, that's not what I want. I want diversification for everyone, but the people that have shared that with me, I felt confident that they weren't, their position was okay, that they were, thriving when it comes to building up, their position their increases on those particular investments because they have been easy investments as long as you held on to them long term, which I've been doing. So, taking a look at my Webull portfolio, these are some of my top performers that I've been building on for the last few years, steady growth, just love them. They haven't really given me too much hassle, sometimes thriving more so than other times, but no problem when it comes to investing into these big names. So I have my Apple, VOO, and VTI, as I said. We have some Tesla, Amazon, um, and then some more Mag 7. We have Google, NVIDIA, Meta. I added just 2 shares of Corcept Therapeutics, a few months ago. Didn't get around to continuing to build out that position, but even that is, doing fine, still up 46%. At one point, I was up over 100%, but I'm gonna put a stop loss on that one and just continue to hold for now. Disney has been one of those ones that has given me a little bit of grief lately, but it's not a large position, as large as some of the others that I shared. And another one that I'm gonna show you in a second, Target, definitely something that I saw that this is not the right investment for me, and that's why I've continued to build into some of the others that I just showed you more so than continuing with the Disney, the Target, and some others in my portfolio. But these are my top performers that I've been building on over the last few years. As I said, in my taxable accounts, I have accounts for different reasons. I didn't want everything tied into retirement that over 59 and a half um, that you can't tap into until that age. So I always like to share that because some people think that I don't have retirement accounts. They think I'm just doing small investments, $5 a day, $10 a day. These are additional investments that I'm doing in order to build up my as I said, my early retirement accounts that I can tap into when I want. So these have been, I just shared kind of some of the easier investments, not Disney, but still I am in the green in it. So I let that go ahead and just share that one in the screenshot. So now over to Target. I'm currently down nearly 35% on my Target investment. And what's going on with Target? Over the last few years, we've seen a decline in sales, the inflation. They've dealt with a lot of theft issues, as well as a few. If you remember, if you were watching the news, I'm not sure exactly the time frame, but they were having those Pride theme merchandise, which was causing a lot of, you know, issues, and it impacted the share price. And going back to 2023, there was even an insider trading scandal. And, now with the tariffs, it's just been a lot of up and down. And Walmart, Costco, Amazon, there are just other retailers that I wish I had made a choice of. But some of the things that I just mentioned, like with the Pride theme merchandise and stuff, I was already investing into this company before some of those issues happened. So now, currently down, I would probably cut this position from my portfolio, but I'm not going to let it go while it's while I'm in the red this significantly. I'm going to hold on to it always. If anything, I'm going to sell when, if it's something like this that I feel can recover and will somewhat recover, I'll hold on to it till it's in a better position before letting it go. And now I'm really going to show you one that is more extreme than my issue when it comes to Target. and that is gonna be ChargePoint. And this is a EV charging station, company primarily that I invested into a few years back, and I had about I have 46 shares. You see, I'm down 95% in this investment. And I'm sharing this because, like Keenan teaches us, we have to know when an investment has graduated, when it is truly, a profitable company, something that we can have sitting comfortably in our portfolio without a stop loss. And I was not, I did not have I didn't have my mindset. I didn't have all of those when I was adding this to my portfolio. I should have been more mindful of it. And as it was coming down, I had chances to let it go before it got this severe, but I didn't. But now I know better and I will do better going forward. But I'm sharing this as one of those examples that when I hear Keenan saying these things about, you know, like I said, graduated, use your stop loss. This is one that I want to share with you so that you can see potentially what can happen. Now, Lisa's over here accidentally diamond handing this, and I am not a person going forward. Now, today, this would never happen because I don't diamond hand investments. I would have let this go long ago, but I was in a different place. But I'm here to show you that everything is not perfect in my portfolio. But looking back to what I was sharing with the stocks, for example, my Apple and VOO, both up over $2,000 from my initial investment. Yes, I am down nearly $800, basically $800, basically my entire investment into ChargePoint. But throughout this portfolio over at Webull, as well as, my investments I have on Moomoo, Public, my retirement accounts, I'm not gonna beat myself up about this. I learned and I'm doing better going forward, but, you have to I'm not stressed about it because thankfully the good drastically outweighs the bad when it comes to my portfolio, but I'm gonna share both with you, and this is one of the worst when it comes to what I've been holding on to. So I've learned risk management, and I now know when to exit. And I'm not going to hold on. I'm not going to hold on to investment and say I haven't had it in my portfolio for a year yet, or anything like that. If it's something that needs to go, it needs to go. And guys, thank you for tuning in. I'm going to be dropping my StreamYard link if anyone does want to come up on the panel. But I just wanted to get started into my topic. I'm almost at the half an hour mark, so I will be doing that soon if anyone would like to come up and chat with me. So one other topic that I wanted to cover today is about savings. Let's see. Did I have anything else here? Just taking a look at my notes. All right, so I want to talk a little bit about high yield savings accounts, where I save, where I keep my money, making sure that all of my money is growing for me. Now, I want my money to be safe, of course, and everything that I share here, nothing. I'm just sharing my journey, my personal experience. Never a suggestion for you to buy, hold, or sell anything. But when it comes to savings, I think that it's very important. I was saying to someone that I want to share with people is I don't want them to overinvest. And what I mean by that is that I don't want you to look at your investment account as your emergency funds. I've heard so many people say that they've tapped into their 401k, took a loan against it, took penalties against it in order to fix the furnace, get a down payment for their home, so many different things. And I've been through a lot of home repairs and different things that I needed money for. But thankfully, I never resorted to taking a loan against my 401k. And then as I was building up, not just my, investment accounts from my true retirement age, even my account, like I just shared, some of my positions at Webull, I'm not ready to tap into those yet. I'm still in the building stage. If something comes up with the car, the roof, or whatever, I'm not looking at my investments right now to be my emergency fund. So I say all that to say that I definitely want to encourage you guys to have cash on hand, a true emergency fund, in order to let you not keep you from tapping into your investments, as well as getting yourself into that high interest debt. Another cycle of pain that I was in my 20s and 30s, digging myself out of some credit card debt. But now things are different, and I make sure to have cash on hand to deal with whatever happens. So I just want to share. So I'm personally right now, I've been using Discover as my bank, but as my high yield, for my high yield savings account, my money market account, things like that. And, there's lots out there, SoFi, Ally. But if you're not taking advantage of that, I just want to highlight this because that local bank, that Bank of America or Chase or Wells Fargo down the road, they're giving you 0.01%, nothing, pennies. So let's take a look at a few of when it comes to, well, I don't think I have screenshots for this, but when it comes to my high yield savings account over at Discover, I'm currently getting 3.6% APY. My money market account is at 3.5% APY for balances under 100K, which is where I fall when it comes to that. And then CD offerings over there, or probably at your local credit union and different places, are still around 4%. So that's another way that you can, your money's going to be locked in for a set amount of time. But if you know that in 9 months that the property taxes are going to be due, or certain bills, or you can use CDs as a way of holding your cash, building up that interest, and being ready then for what is going to come up if you get that in line with your bill schedule. But overall, you can slightly higher rate, just have your money sitting in a high yield savings account, money market account, like I mentioned. And in addition to that, I also make sure to take advantage of my investment platforms. Like this is, let me see, this is my Moomoo account. I'm currently still getting 4.1% there. We have Webull, 3.75%. And even over at Fidelity, I keep my cash balances are usually sitting in this SPAXX, and that is at, let's see, 3.98%. Sorry, it's a little bit small, but yeah, it's about the same, in line with the other two that I just shared. So let me take this down. Hey, Jumpman and everyone. It seems like everyone just tuned in after I've been going for 35 minutes, but please catch the replay. I was sharing that I am going to be dropping my StreamYard link in a minute, actually, in order to give everyone. I actually let me get that right now to see if anyone wants to come up. I wanted to try to do this. I would like you just to, if you don't have your camera on, if you could just show yourself in the background. Okay, so guys, I just dropped it. That's my StreamYard link. If you would like to come up on panel and talk to me about the challenge, just share, about anything that I've been chatting about tonight, feel free to do that. So you will have to sign in to StreamYard, and that'll bring you up. Let me know if anyone's interested, or just go ahead and hit the link. Let me pin that actually. Okay, so that should be pinned. Um, Show us your FXAIX gains again. All right, let's go back to that. Thank you, KG, for tuning in. All right, so this is what I kicked off the show talking about. My first topic of the day. We were talking about, I was sharing how I was in a target date fund that was not performing well, and I shifted over to FXAIX. This is my current position. I'm up 30.56%. I have 742 shares. And this is valued at about $156,000. And I was sharing earlier, let me see, I have to remove this first, that I was in this fund right here that over the last 5 years is up 7.17%. Let's see. Year to date, up 5%, while Fidelity's FXAIX over the last 5 years is up 94.8%. So a huge mistake that I had to find in when it comes to my retirement account. But if you guys weren't here earlier, I was saying that I'm a totally different person now. I am confident. I know what my standards are when it comes to the performance of my investments, and being in that account was not in line with what the S&P had been how it had been performing over the last few years. At a minimum, I wanted to be in line with what you're seeing here. There was no reason. I started that investment in September of 2023. So we were at the end of the year, a year of when we were having such strong returns, nearly 24%. And then we went into 2024 and continued on that path. With this new administration, things have shifted, and there was a bit of, struggle there at the beginning of the year. But if I had continued on in that fund, you see the comparison of the performance of what that target date fund MXBDX was doing, in addition to having a 0.9% expense ratio in that target dated funds, nearly 1%, as opposed to FXAIX having 0.015. So I know Keenan often talks about VOO, but I felt confident and comfortable. I've been with Fidelity for a few years, and even though FXAIX is specific to Fidelity, I was comfortable with going with it, and it has a lower expense ratio than the VOO, though you have more flexibility in investing in different portfolios with the VOO. So I have that in other portfolios where I didn't have to be I didn't have to be specific to the brokerage company. So guys, I have the StreamYard link. Oh, Jumpman, thank you so much for gifting those memberships. I appreciate that. Let me hit you with my I don't let me see.
Thank you so much. We do greatly appreciate it.
That's my little drop that I do to show appreciation for those super chats and gifted memberships. And I see Rel got one. Okay, Jumpman, you received. Jumpman, you gifted and you received? That happened to me one day. I was over at Rel's live. I gifted membership and I got the membership. Guys, you have to have your gifted memberships turned on in your YouTube settings, just an FYI, if you do want to receive them when you're out there. But much appreciated, Jumpman. Okay, so guys, I have my StreamYard link pinned in the comments. I'm going to stay on just a few more minutes. Guys, drop any questions that you have. feel free to hit that link and come up and talk to me on panel. Don't be shy. You don't have to have your camera on, but if you could please just show me your face in the background so that I know that who I can see who I'm talking to. Just wanted to try that as something different, and give you guys that opportunity to come up. So, yes, let's see. So I've gone through all of my topic. Thank you, KG, for uh, allowing us to have this new opportunity as Crown Traders to connect with the people in real time and share. Well, yes, hit that like, subscribe, turn that notification on to all in order to support the channel. Okay, I don't see that anyone asked any questions. I'm just taking a quick look back. You like my background. Thank you, Michelle. Appreciate that. Okay, so I'm gonna give anyone that might have just come in, if you are trying to sign into StreamYard, I don't wanna end. If you are trying to come up, I'm gonna just go back to what I was sharing with some of my other positions, or should I go to the bad? Maybe I'll jump to the bad and go backwards. Because I was up here and I wanted to make sure, like I said, you know, what Keenan tells us about use a stop loss, remembering that we have to wait until a particular investment has graduated before we add it to our portfolio with the confidence of it just being, a buy and hold forever investment. I don't look at many things that way. I am comfortable. I don't have a stop loss on my Apple and Amazon and NVDA, for example, but I before I had that mindset, before I had my eyes open to it, I'm going to share a couple of things. This is another one that I had in my mind. Things that This is Jaguar Health. I no longer am holding this in my portfolio, but this is something that you have to have your hat on, your investor hat versus your trader hat when you are dabbling in these things that are speculative. The year range on this investment is from $3 to $110. So I was in it when I bought into it when it was $1 and it went up to 4. I know I'm not sure exactly at what point I sold, but this is one of those investments that I needed to be having my stop loss on, moving it and making sure to see what I could, knowing that $4 was gonna be the top at that particular time that I was invested into it in order to get those gains. This is an in and out kind of a thing. And another one that I was sharing, that I still am holding in my portfolio, and guys, this is gonna be shocking if you didn't see this already. Now, this is down 95%, and this is my ChargePoint position. And what is going on with ChargePoint? They are a EV charging center, and they have been they I things did not turn out the way that I thought when it came to this investment. They have been slow. Overall, the EV adoption was slower than what I expected, and the company just has been burning through their money. They have debt. They have high operating costs. And when I invested into this company, I was thinking like EVs are the new thing, like they're going to be thriving. And I just wanted to be a part of it. Now, something again, like Keenan has been sharing with us, it had not graduated for me to have the level of comfort that that I had in adding this to my portfolio, and I needed to have a stop loss on whatever time frame I was holding on to it. If it was less than a year, I just needed to take on that tax implication and let this go. Then I wouldn't be in this position now. So I'm going to take a look at the chat. Lisa, do you have any high risk assets in your portfolio? I would say not anymore. Not anymore. And if I do, I know what it is. I have a plan. Overall, I don't really add anything to my portfolio without that start to finish plan. if I feel that it's something that is going to be a trade that, like I said, is speculative, that I shouldn't have that level of comfort that I'm going to be able to hold on to this for years, then yes, I have to have that stop loss on. I have to say, set my percentage, set my dollar amount of how long I'm going to be able to hold on to. So I'm here, like I'm going to share the good, the bad, and the ugly. And like I was saying earlier, thankfully the good outweighs the bad so much more. But yes, I'm still holding on to this charge point. I took this screenshot just last night when I was preparing for this live. Yes, definitely lessons learned. And oh, she's sharing that she also got burned by ChargePoint. Yeah. So the other company that I was sharing, that's down 35%, was Target. So yes, I do have some red in my portfolio. Let me just go back. Like someone had messaged me and told me I'm missing some comments. Yes, Guppy, please check out the replay, and feel free to leave any comments on the live chat. Oh, I see someone has come up on the panel. Is there one or two people down here? Hey, it's Rel. Let me bring up Rel for a second. To stage.
What is up, Lisa?
Hey, Rel. Thank you for coming up. How are you?
I'm doing great.
Looks beautiful, your scenery back there.
Oh yeah, this is my pool deck. We're just hanging out right here having some pizza.
Okay. How are the girls?
The girls are amazing. They're doing
Okay.
great. Just got back from dance, but I seen you post this and it looks like it was a little experiment. So I said, why not? I got a moment.
Okay. So, Rel, I can't wait to connect with you. Rel, I need to at least get a $300. I want to get a $300 option win with you.
I got 300%. Like get a 300%.
Listen, 300% would be better, but listen, I'm setting a dollar amount goal. Let's start with $300. Is that my goal too low for you?
No, that's doable. That's
That's
doable. We just got to
doable?
get through all this data and stuff. We got to get some consistency and some direction in the market so we can get back on those swing trades.
All right. So the market is closed on Thursdays, guys. It's Juneteenth, and so we have a bit of a short week. But yeah, guys, make sure you keep up with your KGs still watching. Make sure you make your decision. I'm not requiring you to do an extra investment for the stock market being closed on Thursday, but if you prefer to keep up with it and do your $50 this week, you can make up for it tomorrow or double up on Friday.
Hey, Lisa, I'm behind on the challenge. What is it and how many days you've been in so I can catch up?
We're a couple weeks in now. You gonna
Hey, I'm loading the boat. What it is?
okay. So I gave some flexibility to this challenge. I basically said I want you, because I kind of mixed up all of the challenges, because we've done the tech stock challenge, we've done the passive income challenge, and I basically said with this one, hey, take a look at your portfolio and see what do you want to build up? Do you want a monthly dividend investment? Do you want to concentrate on a growth stock? Do you need to focus on your foundation, a foundational ETF or index funds? And so I said, you make the best choice for your portfolio where you're at right now, and we committed to 10 weeks, $10 a day.
Okay. Too easy. Got it. I'll keep you posted. I'll keep you posted. So I got to do the math because I don't want to just go all in at once. But I got to figure out how many days I missed and then just,
yes.
average up.
Do you know what your investment choice is going to be if you join in on the challenge with us?
That's a great question. I wonder. Hold on, let me think on that, Lisa.
Okay.
Because right now, like I have, of course, my 401k, I have my Roth IRA, and then like a lot of what I'm doing is a lot of like blue chip companies and dollar cost averaging into those. But I know there's things related to data centers and more AI that I think I would want to get into, and I think I would look more towards like an ETF of that and or an ETF for a crypto. So I'm using Charles Schwab, so I got to figure out probably a good crypto ETF to hop into, or a data center or AI type of ETF to get into.
Okay, okay. Well, share with us over in the challenge chat when you make your decision. Maybe on Fridays, at least once a week, you could share that you're, keeping up with your investments. Lots of people in the challenge do share daily, which is fine. And then at the end of the challenge, I'm going to ask everyone to just give a recap. And then from there, we're going to put the names into the random generator. KG has already said that we get the same prizes that we had for the last challenge, and so we will be choosing our winner. So I see Dexter is asking a question here of, how is the challenge graded? I asked because I see everyone in KGU putting the work in for the challenge, so I wanted to know, how do you pick winners? So I think I just went over that. So guys, I try to react to everybody's posts. And at the end of it, once you guys share your stats, your little receipts, whether it's a little video, screenshots, just to let me know, to prove to us that you've been doing this as consistently as possible. Like I said, if you have to double up a couple of days, I'm not going to hold that against you. I'm going to put all the names. We're going to choose names of who I see posting, encouraging, reacting to other people's posts. And of course, doing this on a daily basis, the way that, the challenge is set up, put those names in the random generator, and I'm going to choose however many prizes that I'm going to have. I'm going to choose the names that way. And let's see, is there any other questions? What link are you talking about? Stream. Okay, you got it. You got it. That's you, Ro. You got up here. Yeah, I haven't done this public yet. Let's see. Only think that you go left if SPY closes over. What? KG is leaving us a little note here. Only thing that can go left is SPY closes over 607 tomorrow, and I don't see it happening.
Yep, he's talking about that vertical spread he hopped into earlier today.
Yeah.
Yep.
The credit spread that we did today is looking like it's going to be 150 in free money. Okay. So I wasn't able to get into that. I do need to upgrade my Webull account in order to have access to that. Do you have all of your accounts? Do you have that availability level 3, and you have a cash and a margin? You have all of that in place, Bro?
Yes, I do.
Okay.
Yep. I don't deviate too much from singles. I do talk about other option trading strategies. On my page, I have like a shorts, like a playlist of shorts defining what each type of options trade options are available. But I like to keep it simple, stupid, KISS, and just go with what I know. And yeah, that's just what I do. But different strokes for different folks. There's just multiple ways to make money in this game. So, and KG is just showing the family once again another way that might work for somebody else versus the single option spreads that we're doing right now. So.
Okay, and I'm sure I think we're going to get more on this in the boot camps and the different things that are going to be coming up. And I am going to make sure to get in contact with Webull to make the adjustments that I need. And I hope I am in time so that next time around I can make sure to be ready for this. So, all right, let's see. I don't think I see Fred. Thank you for tuning in. And yes, please go ahead and catch that replay. Guys, if you're not already subscribed to my channel, if you don't know, Doc Farrell also has a YouTube channel. Jumpman, many of the crown traders have YouTube channels also. And that investment calculator. Okay, so we're going to pull up the investment calculator for a minute. Hey, Lisa just tuned into the show. Okay, I am at work, but thank you for. Okay, I was taking a look at the chat. All right, so I'm going to pull up the investment calculator. So I saw your stakes the other night, Rel. They were looking good. Are you muted over there, or are you frozen?
Oh no, I was looking at my trading view. No, yeah, yeah. I had my wisdom teeth removed, So I had 3 wisdom teeth removed, and I was unable to eat anything solid for a minute. And even the day I ate the steaks, it was too early, too soon. But man, they were good. So your boy likes to throw down on the grill when I can.
Yeah, I remember. You even have a fancy cutting board with your with your logo or your name sketched into it, right?
Yeah, before I was stocks for real, I was cooking real. So hey, that's where they coined the term "let real cook" in the in the KGU.
Okay, okay. Yeah, I was commenting on your page that in February I had to have 2 wisdom teeth removed.
Mm.
And when I went back to the oral surgeon, they said you're healing. You're healing okay for you're not 19, Lisa. Your healing is normal for how old you are. This is what we expected. And I
Yeah.
was like, okay. Listen, I had to wait for 2 months to get my appointment because all the 19-year-olds had all the appointments because they
Yep.
were home from college. I
Yep.
was like, oh my God.
Yeah, that pain was killing me. I was like, I had to like drive like 45 minutes away just to get in. But it is what it is. We got it done. No more issues.
Great. Yes. Yes. Kind of off topic, but I didn't have my wisdom teeth removed when I was 19 because I was broke. I was a
Hey,
broke teenage mom at that age. And so
yep. I
I
think I was 16. I had to go to the local tech college because family didn't have insurance, and I moved out of my mom's house when I was 16. So I had to catch a bus, like an hour and a half bus ride downtown, just to get my teeth removed by some students because it was so painful. So
oh,
I dealt with it, and I just was numb because I didn't have insurance, so they couldn't sedate me. So
mhm.
it is what it
Oh,
is.
okay. So guys, I just dropped the link to this investment calculator. This is the actual one that I love to use. This is the one that I used when I was making my plan that I shared earlier. So this is what I was sharing earlier. This is September 16th, 2022. I keep this screenshot in my phone under favorites in my iPhone. And this is, something I look back on for my little inspiration of I'm gonna get to $1 million investments. So back to the calculator. So guys, if you haven't already tried using this, you have to use your judgment. Like I said, the stock market, 9 to maybe 12% rate of return on average from the S&P 500. You can use that as a bar in order to put some numbers into the investment calculator. I'm on the wrong thing. Let me see. Am I? Let's see. Oh, I have to remove it before I add this back up. So before you put your numbers into the investment calculator, and it may not be $1 million, but whatever your goal is, put the numbers in, figure out what you need to do on a weekly or monthly basis, and then consistency is what matters. And you just have to stay on track to achieve your goal. Every dollar starts. And sometimes I see people, they watch my FXAIX video and they say, oh, it's too late, I wish I would have started when I was 19 and this and that and the other. Start where you're at today. It's better than still having nothing to add in retirement with that Social Security. So what do you think about that, Raul?
I always agree with you. I was
No, you
I was reading a comment. Honestly, I'm sorry. I was reading a comment by one of the viewers, Ashley. I don't know if you peeped what she was saying there, but
okay,
I thought it was pretty important. So I was just analyzing that while you were talking.
okay.
My apologies.
I'm sorry. I'm putting you on the spot, Raul. You're the only brave one who came up here, and now you're stuck being my co-host of the day.
Hey,
So
no fear, no fear.
I am currently maxing out my Roth 401k. However, I don't like the funds available. I'm debating whether should redirect those funds towards my own IRA. So, have you? I tell you, if you really done the work in talking to your brokerage company and you cannot find something that is in line with your goals, that's one thing. But sometimes it's not as obvious. You really have to push them and get in contact with the right person. Because I've been through this. I was really on top of these people at Empowerment as well as Fidelity because I want every last dollar of mine that is invested, that is in savings, to be maximized. Like I was sharing earlier, I've been laid off multiple times. I'm just a little bit frustrated with corporate America, and so I want to see my real estate, my investment portfolio be at the best position possible in order to help me to feel comfort and being able to move forward. And now so many jobs, I was just looking at the news with so many companies. AI is just taking over and eliminating so many jobs. And once you're laid off, it could be a long time, a much longer length of time. The very first time that I got laid off, I was laid off for 2 months. Second time around, it was longer. Third time around, even longer. It's getting harder and harder out here. But I would definitely still do both if you're getting a company match, but really make sure that you're connecting with the right people to see if if you truly cannot get into a fund that is in line with your goals.
Lisa, can I say something real quick?
Of course.
So, I guess by show of hands, I guess everybody put a one in the chat. If you've had multiple jobs and you've had 401ks with previous jobs, right? So I want to know if you had, let's say you had 3 jobs before your current job. Did you get a 401k with those previous employers? Put a one in the chat if this is you. I just need a show of hands. Let's see. Let me look at the comments. Okay. I'm not going to wait for comments, but we'll see if the ones start showing up. At the end of the day, where I'm getting at is that I had 2 or 3 previous companies that I had worked for, and I had 401ks with both of them, right? Let's just say it was 2. Had both 401ks with both of them. I got to a point in my life where I started to learn about investing, right? We got into this world, especially like during COVID, you just have time to do some research. And then I started to realize, okay, well, what happened to that money, right? What happened to the money I poured into those previous 401ks, right? So I found all my logins for all of those and realized that there's been virtually no growth in any of those portfolios. So what did I do? I researched, I learned how to invest. I figured out, if I can be responsible enough to control that amount of money, right? For my retirement. And then what did I do? I just rolled all that into a Roth IRA, right? And now I think I've grown it 300% from where it was to where it is now. Now, I'm not a millionaire. I'm not killing the game. I can be proud of that, but I'm a very conservative person. But nonetheless, it's okay to, I guess what I'm trying to say is that it's a good idea to take control or ownership of those previous 401ks, because your money's just sitting there, and then those people that you're sitting your money with are collecting 1% of your money every year, right? So, and they're not doing nothing. They're not managing anything, and you probably forgot your passwords, and usually that money is sitting and you're just paying somebody to hold it. So why do that where you can just roll it all into your own Roth, and then you can buy Apple and buy NVDA and buy these ETFs and all these other things that you can do in the open market that you can't do with the 401k, right? But you still maintain your current 401k with your job because they do a match. So that's great. But that doesn't mean that you can't have your own personal Roth IRA of all your rolled over past 401ks. So that's what I manage right now. I have my current company 401k, and then I have all of the 401ks from our previous employers also in a fund that I control. I play options with them. When it makes sense, I'm very smart as far as what I take. That is not my daily options train, right? Like those are, hey, this hit a floor, it's time for me to load up, right? I'm not I'm not like day trading or scalping with my Roth IRA account. So just to let you know, like, yeah, I think it's worth it. If you know what you're doing and if you want a little bit more diversity and control over your funds. So that's my 2 cents.
Yes, I want to just add to that. Yeah, I've been through this. Every time I got laid off, then the funds were there. Luckily, the last 2 companies that I worked for, they both were at Fidelity. So I was, was already at the same brokerage company when I started the next job. And then, like I shared, I decided to shift my empowerment over to Fidelity. And I think I always have been highlighting this in a few videos that I've done, is that we're changing jobs more frequently than we used to. I'm going to come back to this in a second. I'm going to wrap up soon. We're changing jobs nowadays more frequently. It's not like our grandparents or, other generations where you might have been able to go and work at the company for 35 years or whatever, or you have a city job or whatever. So with that, you have to be ready that you might be transitioning to another job. You might get laid off or something may happen. You might have to move, and you're not even at the threshold that they want you to continue. They want to pay you out your money. They don't want to let you continue to have it in the fund there. But I want you, whether that's a circumstance or like Rel was saying, just being mindful of, now this money is mine. I'm gonna put it directly into an IRA, Roth IRA, and get it into something that's going to grow. Make sure you're going back and evaluating all of those the places that your money is left, and do it as quickly as possible, because we don't need to start the new job and 2 years down the line and we're thinking like we're looking for it. So keep it all together. That's what I've been able to finally get created with moving everything to Fidelity, being in tune with everything that I'm invested into, and as well as the performance. But even that money, don't take the payout. If they're trying to say, if you were able to invest it and your intention was for it to be for retirement, even if you're not at the threshold that they want to allow you to keep it at their particular brokerage house, then say, I'm going to open an IRA and get it transferred. And when you make the transfers, like when I was moving the money from Empowerment over to Fidelity, I had to open the account at Fidelity, get in contact with Empowerment, and have them transfer it directly over to Fidelity. No hands-on from me, in order to, avoid any tax implication. I'm keeping this money invested. I just wanted to change brokerage companies. So just wanted to touch on that. Now, Ashley was sharing that she's not getting a match because she's going to be receiving a pension from that particular company. So yeah, Ashley, if that brokerage company is not in line with your needs, yeah, explore. Do you say, I think Rel said he uses Charles Schwab. I use Fidelity. There's lots out there that I think could be a better fit. You didn't say what company it is, but yeah, don't wait and let time pass. If you're like I was, being in these high fees, and just the choices are just not in line with what your goals are. So we had a bunch of ones. Lisa, do you invest into crypto? Yes, I invest into crypto. I recently, I would say in the last, since the election, let's say since November, I've added XRP as well as FBTC into my portfolio, because I wanted I had some money. I have an investment account for my business, and I wanted to invest into Bitcoin, but I had to do FBTC over there because I had that account over at Fidelity. But I also have investments into Bitcoin, Ethereum, Shiba Inu. Sometimes I will trade Doge and other things. So I'm not against crypto. I think I do. Let's see, Ashley saying thank you, Lisa and Rel, for your input. Much appreciated. Thank you for tuning in and sharing, Ashley. Let's see. So when it comes to what I do, I think I do everything. I don't have 100 shares of many things in my portfolio, but I do regular option trades. I will do regular, trading of shares. I'm not opposed to crypto, but I think overall I do try to keep a more conservative portfolio. I'm trying to shift to more ETFs and individual stocks, but I do it all. I do a little bit of it all. I definitely need to figure out where my last couple of 401ks are and roll them into my own Roth now that you mention it. Got to figure it out. Definitely. Definitely. Yes. What's the tax implication for rollover? If you roll it over in the correct manner, I don't think there should be any. Rel is agreeing with me, I think.
Yep. Yep.
Okay. Oh, you already said this in the chat. Rel is over there chatting. Okay.
I was trying to cover you.
Okay.
Letting
I'm
Lisa
falling
cook.
behind.
No, let Lisa cook.
Is there a class on taxes for stocks and crypto? Maybe. No, I don't believe there is any information on that as far as classes in the Discord. Okay, and this is Rel chatting with the people. Not that I'm aware. Okay, so you're answering that same question. All right. Thanks. I heard someone is dropping gems up in here. Thanks for tuning in, Tron. The IRA is at a lower contribution limit. However, 401k is higher contribution. How do I overcome this? The IRA has a lower contribution limit. The
No.
401k is higher. How do I
No. The way to overcome is to have both, because you can max out both.
Okay. So, but she doesn't like she doesn't like the selections of the place where the 401k is.
All right, so keep in mind, you don't need to roll over your entire portfolio if you so choose. You can cherry pick how much you want to pull out of that if you so choose. That way, maybe you want to keep 50% with the company and then keep contributing towards that. Whatever, by all means, you can take the other 50% and put it in a Roth IRA and do what you do, right? So the cool thing is that when you are managing your own Roth IRA, like, you're growing your account by investing smart, right? So, like, for example, if you bought AMD at $85 when it was just hit, and you just loaded the boat, now it's $126. Like, you're not limited, right, on the cap of your gains. You're just limited on how much you can contribute, which I want to say is $6,500 to $7,000 a year. Right now, if you have a spouse or a significant other, then you guys can both match both those IRAs as well. Just to, that's how I would combat it. So even if you're, like, for instance, my wife was a stay-at-home. Now she's self-employed. We got her a business, but she being self-employed, I could still have a Roth IRA started for her and maximize that, right? So these are just ways you can combat that, that I know of. Outside of that, I don't know.
Okay. All right. Well, guys, thank you for tuning in tonight. Rel, thank you for coming up. I will try, even though Rel was the only person brave enough to come up, I will next time around when I do a live, I will do this again. So be more prepared. Know that I will give this option of, if you would like to come up on the panel, chat with me, let me know how how the challenge is going. Chat about whatever we have been discussing, whatever the topic of the day is. Service by empowerment. Oh, the same company, Ashley sharing that she's at Prudential, the same company that I had to get away from, she's struggling with. I know your struggle then, because I could not find anything adequate there. And that's why I had to leave. I was so frustrated. I spent a good amount of time on the phone with them. Yeah, it was not the place for me at all. And okay, thanks again, Jumpman, for gifting those memberships. The gifted members, feel free to reach out to me if there's anything that I can help you with while you have your month membership to my YouTube channel. And if you haven't already, please subscribe to my channel and give this live a thumbs up. And I will be in the I will be available in the challenge chat. Feel free to send me any messages, questions, anything over there. And I will see you next time around. I'm not sure when I'll be popping up again for another Discord live, but it will be sometime soon. So be on the lookout for that. And 1 second. Let me see. All right. I'm going to, again, thanks, Rel, for popping up. Maybe next time we can plan to do something together. And I'm going to be, keeping an eye on your channel in order to, like I said, you want me to get a 3,000% win.
I said 300%, but you know what? We can aim for that.
Oh, sorry. I'm messing up the numbers.
I've hit one of those in my life, It doesn't happen too often.
Listen, that was a mistake. So guys, I am live on my YouTube channel every Sunday, 3 p.m. Eastern Standard Time. So you can always catch me there. I do post that in the Discord also, but these are not public. These are for you guys at the Discord to talk about what you want. And like I said, for me to connect with you guys, be able to come up, talk to me, and just share how we're doing with the challenge and any other things. Like Ashley, thank you so much for sharing about what's going on with you and the 401k and everything that's been going on. I appreciate everyone that tuned in and chatted tonight. And I will see you guys tomorrow for your updates in the challenge chat or just in the Discord in general. Thanks again for tuning in, and good night.
And to investments, she made a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay. She'll make it pop. If you wanna make some money, visit Lisa J Stocks. Yeah. Hey. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Hey.